In 1835, the United States did something it has never done since. It paid off its entire national debt. Every dollar, gone. President Andrew Jackson stood in front of Congress and announced that America owed nothing to anyone. The country threw parties. Newspapers called it a miracle of fiscal discipline. 18 months later, the economy collapsed. Banks failed. Unemployment spiked. The nation plunged into one of the worst depressions in its history. Because it turns out, debt isn't what we think it is. And the country that figured that out first became the most powerful empire in modern history. Right now, the United States owes $36 trillion. That number's so large, it stops meaning anything. It's roughly the size of the entire American economy. It grows by about $2 trillion every year. And every few months, politicians stand in front of cameras and warn that this debt will destroy us. They say we're borrowing from our children, that we're on the brink of collapse, that foreign governments own our future. And yet, the dollar is still the global reserve currency. U.S. Treasury bonds are still considered the safest asset on Earth. When the world panics, money doesn't flee America, it runs toward it. So either everyone is lying, or we've misunderstood what debt actually does. Here's the thing nobody wants to say out loud. America's power doesn't exist in spite of its debt. It exists because of it. Let's go back to basics. When the U.S. government spends more than it collects in taxes, it doesn't print money to cover the gap. It borrows. It does this by selling bonds. A bond is just an IOU. You give the government $1,000 today, and in 10 years, they give you back $1,000 plus interest. Simple enough. But here's where it gets interesting. Who's buying these bonds? Foreign governments, yes. China and Japan hold about $2 trillion combined. That gets all the headlines. But they're not even close to the biggest holders. The biggest buyers are Americans. Pension funds, mutual funds, insurance companies, banks, regular people with retirement accounts. They pour money into Treasury bonds because they're safe, boring, predictable. And this creates something strange. When the government borrows, it's not extracting wealth from the economy, it's circulating it. Those bonds become assets. They sit on balance sheets. They get traded. They become collateral for other loans. They move through the financial system like blood through a body. Suddenly, government debt isn't a burden, it's infrastructure. Now let's talk about what that infrastructure actually does. Every major financial system in the world needs a place to park safe money. Not money you're trying to grow, money you can't afford to lose, money that backs up everything else. For decades, that place has been U.S. Treasury bonds. They're the foundation under the global economy. If you're a German bank and you need to hold reserves, you buy treasuries. If you're a Chinese company and you just got paid in dollars, you buy treasuries. If you're a hedge fund and you need collateral for a massive leveraged bet, you use treasuries. This means something profound. The more debt the U.S. issues, the more of these safe assets exist in the world. And the more the world depends on those assets, the more power the U.S. has. It's a feedback loop. When the government borrows, it's not just funding programs, it's exporting financial infrastructure. And because that debt is denominated in dollars, every bond sold is another reason for the world to hold dollars, to trade in dollars, to need dollars. This is why the dollar is still king. Not because America has the most gold, not because the economy is the biggest, but because U.S. debt is the most trusted, most liquid, most essential asset in the world. You can't replace it without replacing the entire system. So, when politicians say we're drowning in debt, what they actually mean is more complicated. Yes, the government pays interest on that debt. Last year, it was around $600 billion. That's real money. But compare that to the power the debt provides.
Because of Treasury bonds, the U.S. can borrow at rates lower than almost anyone else. During the pandemic, the government borrowed trillions at near zero interest. It spent money it didn't have, handed checks to families and businesses, and kept the economy from collapsing. Could Japan do that? Maybe. Could Brazil? No chance. The ability to borrow cheaply in a crisis is not a luxury, it's a weapon. And it only works because the world believes U.S. debt is safe. Which brings us to the uncomfortable part. That belief isn't based on America's ability to pay the debt back. It's based on the fact that the debt doesn't need to be paid back. Not really. Governments aren't people. They don't retire. They don't die. They just roll over debt forever. When a bond matures, they issue a new bond to pay off the old one. As long as people keep buying, the system works. And people keep buying because everyone else is buying. But there's a catch. This only works as long as the world believes it works. The moment confidence cracks, the entire structure starts to wobble. If investors suddenly demand higher interest rates, the cost of borrowing explodes. If foreign governments decide to sell their treasury holdings all at once, the market floods. If another currency or asset starts to look safer than the dollar, the demand for U.S. debt shrinks. None of this has happened yet, but the possibility hangs over everything. And here's the paradox. The U.S. has to issue debt to maintain the system. If it stopped borrowing, there wouldn't be enough safe assets in the world. The financial system would seize up. But the more debt it issues, the closer it gets to the point where people start to wonder if it's sustainable. So the country's stuck. It can't stop borrowing without breaking the system, but it can't borrow forever without risking the belief that holds the system together. Meanwhile, rivals are watching. China has been slowly trying to internationalize the yuan. Russia and other countries have talked about trading in currencies other than the dollar. The European Union has discussed creating alternatives to treasury bonds. None of these efforts have worked yet, but they're happening. And if the dollar ever loses its status as the global reserve currency, the U.S. loses more than a financial advantage. It loses leverage. It loses the ability to fund itself cheaply. It loses a key pillar of geopolitical power. So here's where we are. The United States owes $36 trillion. That debt has made it the most powerful country in the world. Not weaker, stronger. But that power is fragile. It depends on trust. It depends on the world continuing to believe that U.S. debt is the safest place to put money, and it depends on the U.S. never testing the limits of that belief. Andrew Jackson thought eliminating debt would make America strong. What he discovered was that debt used correctly isn't a weakness, it's a tool. And right now, the U.S. wields that tool better than anyone in history. The question isn't whether the debt is too high. The question is, what happens the day the world stops wanting it?